Audio is coming through. Okay, welcome back, everyone. Now, let's go to the charts. Who's excited to learn? Let me see in the chat. 79 people are going home. They are like, we don't want to hear anything anymore. Had enough. I just want to bring up the correct chart here. There's a couple of things. And we're going to go to that one. Okay, we are here. Let's go and choose randomicity again. I'm going to move over to the other chart now. Okay, give me an 8 in the chart. Can everybody see me? Give me an 8 in the chart. Give me an 8 in the chat if you can see my chart, right? Okay, so a couple of things. I made some notes here, things that I want to talk about. Again, we're going to talk about curve, trend. If this is your first time on this call today with me, since we've been doing Futures Live online, I am going to request that you make it, your duty to make sure that you go through the other two sessions. But I wanted to cover a couple of things here again today. And so we're going to look at what's important again. We're going to check the curve again. I'm going to show you examples of checking the trend again. And today we're going to add the breakout segment to it as well. Okay. So just to recap again, when we're drawing on a chart like this, let's just say this is our chart and we're on a daily time frame. If we go from current price, we'd go down and to the left to the nearest demand zone, right? Without cutting through candles. Write this down for your notes. A leg out is not cutting through candles. So when I draw on this zone, I'm not cutting through candles to get there, right? Give me a second, I want to close this PowerPoint real quick. Does everybody understand that? When I'm drawing a leg out, when I have a leg out on, I'm not cutting through candles, right? Not cutting through candles. This is not considered cutting through candles. Does it need to be a good time, a score for curve, 1 to 3 candles, or is it okay to have more? What we need is zone structure out in answer. So time forming part of that as well. We generally want to see a curve that has good, but what we're going to do is we're not going to try and make the curve better. So for instance, we just don't want a bad curve. We can have a great curve, we can have a good curve or not a bad curve. I do believe I turned the recording back on. Did anybody here recording has started again? Yeah, because it says pause recording, so it has to be, yeah. So what I mean by that is when it comes to the time odds enhancer, right? We just don't want to have one that's bad on the time odd enhancer. That's it. But anything in between is fine, right? So that's where you draw your curve. And if you're used to drawing your curve somewhere like over here or even over here, right? Or even further back than that, let's say somewhere over there, that is not correct, right? As the rules for curves state that we need to draw the nearest quality zone. I'll say that again. Not the nearest best quality zone, just the nearest quality zone. So first of all, it needs to be near, and then it needs to be quality. So what do I mean by that? Let's say you get a near zone, but it's bad quality. You're not going to draw that one on because it still needs to be the nearest quality zone, right? The nearest quality zone. Everybody with me? Okay. Now, here might look like here's some kind of a zone. Rally-based rally, there's no zone there because number one, the candles haven't closed. And number two, as best practice would be for you, is usually you want to have a variation of color in your zone, not just all green candles. They will fare a lot better. Quality means doesn't mean you meet your zone structure or in answers. So it's got to move out or break out. It's got good time, right? Zone structure. I'm not counting 6 candles in that zone. And that I'll teach you when it comes to zone. When we go here, that's your leg in, single or series of candles of the same color in the same direction. And this will be your leg out. You'll also discover that you are not supposed to be looking for bases when it comes to zones. You're supposed to be looking for leg ins and leg outs, and everything in between becomes the base. So that is 1, 2, 3, 4 candles. 4 candles in the base. On your curve, I thought the leg in was the red candle because to me, it does not look neutral. Will you explain at some point in this next 2 weeks? You say the red candle, this one here, Tony, is it the first red candle or the last red candle? I'll explain it right now. Yeah, there's 4 candles in it. All right, we look at the leg in, leg out. Tony, are you speaking about the first one or the last red candle? You're just saying yes. I'm not sure which one. Okay, the first one. That's also a misconception that we will talk about in detail when it comes to zoning, right? But this isn't. This candle is a basing candle because it's smaller than the candles in the leg out. And the leg out is not one candle, it's a singular series of candles. So, in your mind, if you're taking notes here, all these candles here, you should visually make it as one. Now, let me show you where you would easily notice that that's a base. If I made all of these candles and I told you this was one singular green candle, right? You saw it as one singular green candle. And over here, all these candles you saw as one singular green candle. Would you not easily say that, oh, that's obviously the base? You guys agree? Welcome back, Andrea. Would you agree that if this was one singular green candle in your mind, and that was one singular green candle, no one would be second guessing any of this here? Here's your light bulb moment. That's exactly how you're supposed to see it. Because a leg in is not a singular candle. Most of you will probably remember this. When the leg in and leg out is drawn, it's drawn on like that and like that in the Sergio on demand. But when you listen, it tells you that that's only the start of it. The series of candles running into it is the entire leg out, leg in. And the series of candles running out of it is the entire leg out. And none of the basing candles inside of here is allowed to be greater than the leg out, which is all of these candles, or the leg in, which is all of these candles. Doesn't matter if it's closed inside the candle. All right, that's also something that a lot of people pick up, but you won't find that in the education. It doesn't say it needs to close inside of there. That is just because we see the drawing, because the drawing's been made perfect so that you can see what it's supposed to look like. But if we were to apply that rule about it only closing inside of that area, guess what you're going to struggle with? There's very little zones that do that. Do the candles in the leg in or the leg out have to be the same color? Yes. Right? On a zone, not on trend, but on a zone. If you're finding a zone, which curve is a zone, write this down for your notes. Curve is a zone, trend is a zone, and zone is a zone. I'll show you how all of them are zones, right? So could you have a mini red candle in the middle of the leg in and leg out? No, you can't, because that will make that mini red candle a base. If I have a mini red candle here, for instance, then that will be a rally base rally. So then the closest zone will be here. The first red candle isn't a drop, then base, then rally. No. The reason this red candle can't be a drop base rally is because if that red candle, listen carefully, everybody, is a drop, the rules for leg in state that the leg in must be greater in significance than any basing candle, and that will be a problem. That cannot and never will be a drop base rally. Who's learning today? Are you learning? All right. And again, Brandy, thank you for those questions. Keep the questions coming, right? Someone asked, Brandy asked, can this be a drop and this be a base and that be a rally? The answer is no, because that drop is the same size as all of these candles inside of here, or relatively close in size. And the rules are clear on that. A leg-in can never be the same size as the basing candles. What trips us up is that we look at the basing candles and we say to ourselves, but surely these are smaller. But it's not, because it includes the wicks, not exclude the wicks. For me, Jack, if I get over, this is just personal preference, but if I get over 5, I don't take the trade. That's when I'm talking. Sorry, if I get over 5, I don't trust the curve. But if I get over 4 in my zones, I don't take the zone as well. Thank you, Richard. 6 candles are okay for curve. I will draw the curve on, but I'll expect it to break if I have 6. Right? I'll expect it to break if I have 6. 5 is okay for curve, yeah. I would use 5 okay for curve, but over 6, I'll expect it to break. So you're saying you don't take a zone for a trade with 4+ candles? Yes. I don't take a zone for a trade with 4+ candles. And welcome, Thiago. I think it's the first comment I saw on you today. Yeah. You're hiding in the wings there. You haven't been on the class, or you're just secretly coming right at the end. Right? I'll catch you out. The Lord will show me this. Okay, so we establish again curves are close, right? What if the zones on the trend time frame are not showing up? When you bump up the time frame to check the highs and the lows, are they good zones for entry? What if the zones on the trend time frame are not showing up when you bump up the time frame to check the highs and the lows? Usually that isn't the swing point, Andrew. Usually then that isn't a good area to draw the trend from. Because if they don't produce a rally-based rally on a higher time frame or a drop-based drop on a higher time frame, then likely on a lower time frame it wasn't the trend. Yeah, Angelica D, we catching you guys out. Angelica was like, I'm gonna confess, I'm joining at the end. Tiago was like pretending he wasn't. We caught you out. Okay. So curves close, right? Curves close. So if we were drawing the supply curve on this one, I'm just gonna take some of this off. If we're drawing the supply curve on this one, we'll go up into the left to the nearest supply zone without cutting through candles, and we're gonna see if there's anything here. So here's some things we gotta ask ourselves again, right? Zone structure. Where is the zone over here? You could realistically get away with two types of zones, right? This could be one. Okay, just give me a second. My mouse seems to be going slow here. I just want to close. Sometimes this happens when I got 4 screens that I'm streaming at the moment. And it occasionally happens when I'm streaming too many screens at the same time. So I'm gonna turn off one and I'm gonna close that. And I'm gonna restream again. Okay. There's no base, what Scott says, to look at the high or low wicks. Yes, sorry, this was badly drawn also here. My mouse stuck. So my rule of thumb for that is the following. When I have a rally in and a drop out, I use the highest candle. A rally in and a drop out, I use the highest candle. Why? Because curve says wick to wick. So I don't want to change that rule. So I stay to the highest candle. Would you be cutting through candles with the supply curve zone? No. Why? Because this is the leg out. And what did I say earlier? The leg outs is not considered cutting through candles. Right? Julie's asking that turn on the recording. I believe everybody said yes earlier on. So Julie, where were you? Will you sneak away and come back? We got you. You're just showing yourself up. So no, this is not cutting through candles. Cutting through candles does not refer to the leg out. Now you might be saying, but what about this? That is cutting through candles. Now I've covered this particular portion in every class with you guys since we started. Yes, this is inside of there. Yes, this is potentially cutting through candles, but this is a curve in which we've just entered for the first time. What is curve? It's the expected point of trend reversals. So when we just enter into a curve for the first time, I'm not going to consider this to be violating that curve because it just as well might turn away from that curve. And if we violate all curves when we touch it the first time, we'll have no curves. Right? So someone saying, so Angelica, you're saying the price has gone into 50%? Yes, but it's just gone in for the first time, right? And what happens? It could go and do this on the trend time frame, which means if I remove this and I put my curve somewhere higher, let's say there, I will never know that this is the reversal area. So I violate this curve if, listen carefully, it's closed into it and traded into more than 50%, leaves it and tries to come back up. Then I'm saying, no, this curve is off because we've been in there more than 50%. This is going to go through, right? Or if we do the following, we leave down, we go up again, we leave down again. Price has gone into that curve 2 times. That's the other rule for zone, right? That applies to curve as well. What's going to happen now when it comes back up? Likely going to go through. So then I'll disregard this curve, look for something higher because we've already been in there twice. It's likely going to go through. But when we touch it for the first time, I do not violate the curves because it's the expected point of trend reversals. Expected point of trend reversals. Yes, Liz G, I leave it alone because I expect it to turn, right? But when I expect it to turn, do I force it to turn? No. Now remember, I look for that M's and W's I just showed you now. I look for it on the trend time frame, not on the curve time frame. I look for it on the trend time frame, which means on the trend time frame, we have gone into the curve more than 50%, right? I'm not taking a singular trade here until price comes down and breaks and creates an M. If price doesn't decide to come down and create an M and it decides to go up instead, then I can violate that curve because we've gone right through it. But I don't want to violate my curve or remove my curve early because my curve might still work. M's and W's are always trend time frames, right? And by the way, I didn't go to the correct time frames. Yeah, I just randomly went down. So what time frame was that first one on daily? So 4 hour. M's and W's, regardless of what you see on my screen, what time frame I go to, is always on your trend time frame. Write that down. You do not look for M's and W's on your curve time frame. You do not look for it on your entry time frame. M's and W's are trend time frame. So can we establish quickly, first time into a curve, we do not violate it, even if it's gone more than 50%. Can we get an 8 in the chat for that? You learned that today. The reason we do not violate it is because what is trend? Keep saying that to yourself. What is trend? It's the expected point. Sorry, what is curve? It's the expected point of trend reversals. I cannot take it off. If I take it off now, that means I must take off all my curves that we touch. Right? We expect it to reverse the trend, whether that reversal is temporary or whether it is long. Right? And when judging an MOW, are we only looking at the candle body to decide if it's formed? Does it have to close above or below the wicks? M's and W's are only body closes, right? Never wicks. So if you get this, it must close beyond the midpoint. This is not an M. And this is not a W. Why? Didn't close there, didn't close there. If that doesn't close with the candle body through that, it is not a W. If it doesn't close with the candle body through that, it is not an M. We got that, everybody? Remember, I showed you guys that yesterday by tricking when we did trends. Okay, we're getting somewhere. Now, quick question. Give me a second. Oops. Okay, quick question. But if the midpoint is a wick, it doesn't matter if the midpoint is a wick, Linda, as long as we close through that wick with a body. Good question, Linda. That was a good one. If the midpoint is a wick, it doesn't matter until we close through with the body, like here. If we get this is not a W until we get here. It becomes a W right at that point. And surprise, surprise, immediately after closing there, what happens? This candle trades down into that zone and then shoots up. Someone says my volume dropped. How's that? It's better now? Let me turn it up a little bit. I want to shout in your ears. Okay. So we're keeping on track, right? Okay. So we understand that curve is closed. Curve is close by. And if we look at this over here, let me just see, you just backed away. Okay. Okay, so we understand now that curve is close, right? Over there, this is our curve point. And we're going to talk about trends as well. Let me quickly just check where I am in my notes here. Okay, so in the chat quickly, who's all using curve? Who's all using curve? Whether you know how to use it or not, let me know if you're using curve. And then if you're not using curve, be honest and say, no, I'm not using curve. Say, I think, coach, you're speaking a bunch of nonsense. I don't like it at all. Type that in the chat. Coach, you're a liar. I don't believe. Okay. You can kick yourself now. Right? You're going to kick yourself. Mario says, you're struggling with curve. Simple, Mario. Nearest quality zone. Mario, if you can draw a zone, you can draw a curve. Just find the nearest one. That's quality, closest to current price. Don't overcomplicate it. Nearest quality zone. That's it. Don't. Here's what people do. I wonder if it's this one because we're so close to that. Is that the nearest one? The answer is yes. Draw it on. Right? Draw it on. Can you do a full example from start to finish? Andrew, this was one. Down into the left. There. Up into the right. There. Curve. I'll do another one. No problem. I'll do another one. Let me do a random spot here. Here's my replay. Hopefully, TradingView doesn't start a new one. Okay. Yeah. Now, looking for curve. What do we need? Up and to the left to the nearest supply zone. There. Do you really want to draw that close? No. But the strategy says to, so I have to draw there. Right? Now, down into the left You might be thinking here. Who's thinking here? Who's thinking here? Yes or no? If you was, you're forgetting the fundamental rule is that we need to have quality. What does quality mean? It needs to exhibit zone structure or enhances. What is zone structure? It needs to have a move out or a breakout. And what is a zone? The basing candle can't be equal to the leg out candle, therefore there is no zone there. See? If the basing candle is the lowest one here, it cannot be equal size to the leg out candle, therefore no curve, no zone at that point. All right? You see that? I'll come to your drawing now, Tony. Let me do this first. So applying those rules very strategically makes it so easy to just say, okay, not looking at that. Go to the left. How can I get to the left easy? And know where I need to trade. Put a line there at the lowest point. All right. And we go to the left. And we simply just look for a zone below the black line. Rally, base, rally. How many basing candles in this formation? How many basing candles in this formation? There we go. 1. See, you're counting that in because it looks smaller, but you're forgetting that the rule state a single series of candles. This is your leg in. That is your leg out. And everything in between is the base. 1 candle. I'll show you when we get to zones, the zone class. That's not, I didn't make that up. That's in the education. All right. Do you include the leg in wick for the proximal line? No, I include the leg out wick for the distal line on this one here. The leg out, that's also in search strategy on demand. It says when drawing curve, the best practice is to go to the leg outline or the leg outline on even if you're drawing it from supply. I could really, I don't have the time because I searched through all of the ones, but I could really go and find all of these little things that I'm telling you guys in the videos. I promise you, I'm not making it up. I promise you, I'm not making it up. Could you explain again why that candle way back on the right, on the left, you mean was not on the curve? It's not part of the curve because it's not part of the base because it's part of the leg in. But if you're speaking about the right candle over here, this one is not cannot be part of the curve because the rules for zones, which a curve is, remember I had you guys write down curve is a zone, states that the basing candle cannot be equal to the leg out candle. Since the leg out candle is the green candle and the basing candle is this candle, and the candle includes wick to wick, that is greater than the leg out, so therefore this cannot be a zone. That's not even a drop-based rally. I know you guys think that's a drop-based rally. That's a nothing-based rally. Right? It's a nothing-based nothing. That's what it is. Right? A nothing-based nothing. An NBN, that's a new one. We're creating that. A nothing-based nothing. Right? Aaron says, I don't think I would have picked that initial supply curve. The base looks the same as me as the leg out candle. Nope. What is the leg in? Single series of candles of the same color. What is a leg out? Single series of candles of the same color. Everything in between is the base. But what did I say about 20 minutes early on? When someone mentioned that Scott said, go to the wicks, Mr. Scott said, go to the wicks. I said, I do something similar, but what I do is I choose the highest candle in that series. Now, technically, this green candle is a little bit higher than a wick over there, but I would rather just choose the candle that's smaller in that series and high, right? So over there. But that's okay because that's rally in and the rally out. And this candle here, if I isolate it on its own, is smaller than even these 3 there and smaller than those 2 there, making it okay to be used as a supply curve. NMAS says, Sharon, you're so kind, so helpful. Thank you for always going back over in real time to refresh our memory and search strategy class. Guys, don't forget you can always go back and refresh your own as well. Yes, we're not spending a long time refreshing, not actually learning new info. Yes, right? That's important. I want to give you the new info as well. Everything I've said here so far was said in both the first 2 classes, right? I just need to go and watch later. I need to pray for a friend that surgery yesterday. Sorry, Debra, we'll keep your friend in prayer as well. Please pray for Cameron. He's 20. We will do that. We will do that. Right? Okay, so that's curve now. Knocked out. Curve needs to be close, right? And then we need to deal with trend. We go to our 4-hour, right? And we do the following. Down, here, let's say there. I'm just guessing. And you can guess. That's okay. Because when you use the bump up trick, it solves where you were guessing, right? Let me quickly just jump to the other chart that someone sent in earlier on. Is that the curve? Up into the left, the nearest supply zone? Yes. Down into the left, the nearest? No. It's not the curve at the bottom. The rules for curve is we cannot go. The rules for zone, which curve is, we cannot go into it this multiple times like this. It's way too much. That curve will be sitting somewhere here. Right? There. Okay. Top curve is fine, bottom curve is bad. Okay. What type of trend is this, everyone? What type of trend is this? Let's type it in the chat. Remember what I taught you yesterday? 2 phases. 1, where's 2? And then if we have that situation, we look back, right? We look back because then we want to understand what could it possibly be. If we go back, we see this. Maybe something here, maybe something there, right? And if we do that, we have possibly here and possibly there. And then this one's not part of it because that will be a leg in, a leg out. But here's how you solve all of that. We don't know which ones it's going to be. Let's make it easy. Let's follow the strategy. Let's go and look on a higher time frame, not higher than our daily time frame. We go up until we see a clear drop base drop, right? See the drop base drop, and then we know what type of trend we are in. Not yet. It's just a bunch of candles. Someone asked earlier on, can that be part of it? No, right? This area must turn into a drop base stop. 8, 12. So we probably got something on an 8 here, right? But that's not clear. 12, all of these candles come together, right? What does that tell me? This area, never going to hold. Why? All of the candles are the same color. I take that off, watch carefully, and you're going to have this on the replay. You won't get it now, but you'll get it on the replay. I take that off. I continue my swing points. I go up, never higher than my daily. This curve was set on my daily. What do we get now? Watch carefully, everyone. Watch carefully. This is why you use the bump up trick. It clarifies the correct highs for you. What trend do we have now? 1, 2, right? Almost. It needs to go lower than that, right? But remember, this is not our trend time frame. We're using it to validate it, to look to see if there is correct swing points. That's all we're trying to do. I know it's a little confusing, but we'll do it over and over, right? So what can I do? I go back to my trend time frame, which is my 4-hour. Now I look if those 2 points that I drew on, do they actually close below that points? Yes and yes. This tells me that this area here is the controlling swing low. And I could probably take this as a zone or this as a zone. If I didn't want to take both of them, I could wait for an M to form out of here on the trend time frame and take that down. Now, if I play it up, let's see what happens. Amazing, right? Watch. We'll check something now. That's okay, that little overshoot. Now the curve is broken. Once we close through part, and you follow those rules, that would be a 2-to-1 trade. And why would that be a 2-to-1 trade? But probably not the best trade because you're in an opposing zone there already on your trend time frame, right? You'll get it. You'll just have to see it multiple times. Let's do it again from a different perspective so that you see it, right? Let's choose a different time frame and go with the 4-hour. We go, this is now our curve time frame. Listen carefully. And remember, you will not get it in this session, right? You will get it on the replay when you listen to it again. That's when you'll get it. When you slow it down and you pause and you rewind, that's when you get it. That's just how I got it. That's how everybody else will get it as well. Down and to the left, to the nearest demand zone. Best practice, include the leg out wick. Now, let's ask ourselves, is this a zone? Right? Is that a zone? We follow the zoning rules, series of candles. Series of candles. In my mind, I see this as one candle. I see that as one candle, right? So now I just do what I said earlier on. I use the highest candle in that series there, and that's the zone. Okay, now I got my curve. From my 4-hour, I go down to my 1-hour to find my trend. What type of trend is this, everyone? What type of trend is this? It's coming. Trust me, it's gonna the light bulbs are gonna hit at different times, but it's coming because you're gonna see. And then when you join me in Search Strategy on Demand and all of those future strategy on demand, you'll see the same thing over and over, and we'll get terminated uptrend. Yes, because we went up. Now look at this. Most of you didn't even know what a terminated uptrend is yesterday, and you think you're not getting anything. Come on, stop beating yourself up for the things you think you don't get. 90% of you got all the trend stuff wrong yesterday. Now you're all getting it correct. See what I'm saying? It's working already. You just don't see it because now today is hard, right? Today is hard because you're getting new information, but it's a repetition. Your uptrend got terminated there. So can we buy up? No. Can we sell down? No, because we're in a terminated trend. What do we need? We need a trend to get confirmed. So we need to play it forward until we get another trend. Let's see what happens. Either we break the curve. This is why you must have the curve on, because if the curve breaks, that's not bad. That tells you that you can reset your curve to another point, right? And now let's check here. I'm waiting for it to go through. It's through. That curve is violated, right? Now a curve doesn't have to. Oops. A curve doesn't have to violate by a closure through a body there. That's trend, right? A curve is more than 50% into the zone, then it's violated, especially if price is coming back to it again, right? Karen says, why is it terminated? Because it closed below the controlling swing low, which is this over here, right? If you had two phases up, which you get over there, one, and that's two. At any given time, if you go down below the controlling swing low, which is here, that's violated. Now you have a terminated trend because you must have two phases in one direction to have a trend in the first place, right? I'm telling you, it's going to click. It will click at different times for everybody, but that's okay. That curve is violated now. So what does that mean? Immediately, I go up and I find the curve. Now, here's something interesting. Because you might be keeping the lower curve on, but you shouldn't because it moves up there now. Why? How do you know when to move it, Chadwin? You move it because that's nearer to current price than the other one was. And the rule state nearest to current price. So it's on the click now, everyone. It's yes, it would be sideways there, Brandy. That would be sideways trend, right? But a violated curve. You see what I'm saying? So on the click, now we move it up nearest because we know the rule nearest. We're not guessing anymore. We know the new rule says nearest to current price. So we move the curve up. Now, where are we going to find the curve? We need to evaluate zone structure on and on. So no zone here, no zone here, because they're all being traded into. None here, none here. And remember, you can go as far back as possible. It just needs to be closest to current price. Here's it. Wait a minute. Why did you choose that one? Well, this zone, that zone, that zone, that zone, and that zone has all been traded to, as well as that one and as well as that one. All these prices, see there, has been traded to. And this one. What is left behind? That one. There's your new curve. It's far away, but it's the closest quality zone to current price. Then back down to our 1 hour to establish trend, right? And what trend are we in now, everyone? What trend are we in? You guys didn't listen to Brandy's question earlier on. We cannot be in an uptrend. Where are your two breaks? We don't even have one. Now you might say, but wait a minute, isn't this the break? I will charge you to go back to the little video I played of Kayla yesterday, because what did she say? It can only get terminated on controlling swings. If that controlling swing is there, because that was the one that broke this, it needs to go there. But the problem is we don't even have two breaks. We don't even have one break. So what do we need to wait for? Play out trend time frame out. And now that curve violates. Now, here's what you should like about this. Right now you're thinking, but that would be bad. I would not catch any trade because it went up and I missed it, and it went down and I missed it. Right? And so there's no trade there. So now this strategy doesn't work because I lost all of that. You know why you should be happy about this? Is because when it went up, right? In fact, why you should be happy about this is when it came down, you would have gotten stopped out there. When it went up, you would have gotten stopped out there. When it came down again, you would have gotten stopped out there. But if you apply the rules, you would be in none of these trades and you wouldn't get stopped out on any of them. No high probability conditions. And isn't it interesting that if this was an uptrend, it would have continued up. But what is it? A sideways market. What do sideways markets do? Take out lows, take out highs. How did you establish it's a sideways market? Terminate the trend and then took another high. What did I show you yesterday? What sideways? Easiest way to see a sideways is it goes up and it goes down. Takes a high, takes a low. We're in a sideways market. Or it goes down and up and then down again. Sideways market. What will price do after that? Either chop around here or go up and down the entire time. But that keeps you out of the market. And being able to recognize no man's land is key, because you would not be in this and you'd be safe. And you'd find something else that does have two breaks in the same direction. So the new high was not made because the body did not hit it. The body didn't close through it here. So there was no new high. But even if the body did close through there, it still would not be an uptrend, because an uptrend requires two phases in the same direction. Come on, everybody. Write this down for your notes. Just because the market moved up or just because the market moved down does not mean there was a trade. We don't trade everything. We trade high probability. So right now we have one breakdown. Yes. Let's play it out without putting on the curve quickly. Chopping around here. Okay, two breaks down. What type of trend do we have now? Okay, let's play it out some more. What do we have now? By the way, real quick, just to show you the brilliance of having it correctly done, right? Here we got, every other place we got one break, right? There was one break up. Then we got one break down. Now we got one break, two breaks. Now look what happens. I get my two breaks. I put my short on. Chops around there, right? But look which direction it went. Yes, we didn't get far enough, but we wouldn't be in this trade because we'd see a close opposing zone here. And there is likely a curve there as well. But I'm trying to just show you something. When we did get two breaks, it actually went that direction first. Do you see that? Let me just see. No, I think it might be you, Mandy. It might be you. Is pop on my screen? No, because I can see. Yo, what's just happening? No. Let me just see something. I'm not sure where that is. Oh, you know what? That might have been my earphones. Might have been my earphone. Because I'm thinking my laptop is full power. Thank you, Mandy, for that. Right. So what I'm trying to let you see is this was still down. Now, would we have taken this? No, because look at how bad this is. All of this was bad. Over here, the zone was bad, right? But I'm just trying to show you that when we did follow the direction, it still gave us that indication. But look at here. Did it stop at the zone? No. Ran right through it. Did it stop at this zone? No. Ran right through it. Why? Because there was no trend. This one had a trend here, and so it gave us a reaction. That alone, even though this is poor price action, should give you an indication that two phases make a difference. That was proof that Mandy told me the answers now. So yeah, that really was. I think it was my earphone saying low power mode because I had one earphone in and I've been using it for the entire call. Could be that because the laptop is full powered and everything is. I'm on backup supply in any case on the house, so it should be okay. The man is still giving me the answers. Okay, so let's keep going because we need to get the breakout segment, right? We need to get the breakout segment. I know you don't fully know trend yet. We're gonna get to trend and then breakout segment and things again. But before we do that, right? Remember, you know a little bit more than you did even by trend now. Many of you know now when the terminated trend is happening, when it's not happening. We're gonna do it again, right? Don't assume you'll get it all from one class. Just don't. That's gonna get you. Yes, you can, Brandy. Caroline, I do assume that you might be confused what you know about trend because we are breaking that cycle of how people drew trends, right? Do we have to break below a CSL before our first break is considered? If we are in an uptrend, if we break below a CSL, that is a terminated trend. Yes, we are finding zones in a breakout segment. So here's the next phase, right? We're drawing a trend. So I'm gonna make it larger. What type of trend is this, everyone? And why? Because we got two breaks, right? As a minimum. We just need two as a minimum. Brandy, it's not two breaks of a controlling swing high. Be careful with that. In an uptrend, there are no controlling swing highs. Right? That is just a high, not a controlling swing. Why is that important to note? Because controlling swing means it's an area that can never get violated if the trend continues. That's just a high. And in a downtrend, we don't have any controlling swing lows, right? We just have controlling swing highs in a downtrend, right? Okay. So I'm going to type on numbers and I want you to work with me. You're going to learn something. This is helping you trend understanding as well. What just happened? Oh, come on, man. That just randomly changed now. Did I replay to the exact point on the chart that was going to change as the candles move? Can't be. Number two, number three. Number one, number two, or number three, and I'm referring to not the zone, but the line rather. So the thing I'm numbering is these lines, not the zone, right? When you look at this, which one of it? Trend reversal will be in the M's and W's class, Liz. Trend reversals are only applicable at curve points. When we deal with trends in isolation, we are not. Why am I so dark? My light is off. We only deal with trend reversal at curve points, right? Let's answer this for me. Which one of these numbers is the controlling swing low? So to be clear, uptrends have controlling swing lows and just swing highs, correct? Okay, while you're at that, right? Okay, good. We're getting some answers here today. We're learning. I know you think you're learning nothing because you're still confused on trend, but here's the thing: write down the things that you do learn in the session. That's how we build it, right? Don't say to yourself, I still can't figure out how to draw a trend and now I know nothing. Write down the ones and the stuff that are becoming clear to you. We got two breaks, that's a trend. You got that, right? Now you can learn about controlling swings, right? You can learn about controlling swings. Some of you said three, some of you said two, some of you said one, right? The only controlling swing low over here is number two. Is number two. Number one isn't because it did not proceed to take a high, and every controlling swing low must proceed to take the high. There you learned another thing, right? You learned another thing. You following along with me? Okay, so number two is the CSL. Controlling swing low. Okay, number two is that controlling swing low. Okay, so now we're taking it a step further. Before I go to some of the other drawings, we're taking it a step further. We now understand that the trend needs two phases. We need to trade. We need to establish a controlling swing low. Why do we establish a controlling swing low, everybody? Why do we even need to know what a controlling swing low is? Can you type it in the chat for me? It terminates the trend as one. Because we should not find any zone below the controlling swing low. Any zone below the controlling swing low cannot be traded at all. Okay. Now, Which one of these colors is the breakout segment? Come on, let's type in the chat. Let's all participate. Okay. Now here's your light bulb moment, right? Here's your light bulb moment. The only color on here that is a breakout segment is the purple. Why? Because just like the CSL, right, that needs to break above the high, the breakout segment is the last leg from the CSL that breaks above the last pivot point, which is that created the CSL, right? So this is not a controlling swing low. Come on, everybody. Now, oops, we're getting somewhere. Why is the blue not the CSL? Because it's not the last breakout segment. This cannot be because it's the last phase that took a high. Angelica, we cannot go beyond that one because it broke here. By the way, this is also how you move your stops. You'll move your stops below the controlling swing low of the trend time frame, right? If you entered on the trend time frame, or the controlling swing low of the entry time frame if you've entered on the entry time frame. There isn't really controlling swing low on the entry time frame, but we mimic the same behavior that we use on the trend time frame on the entry time frame. Now, I want you to look at this quickly. Let's say this is a drop base rally with 2 candles in the base, right? Let's say this here is a also drop base rally, and let's say this one has 1 candle in the base. And let's say this is also a drop base rally, and this one has 4 candles in the base. Now, let's do this. 3 candles in the base here. Which one is the one you should trade? You're scoring your odd analysis, you're looking at the trade. Which one is the one you should trade? Give me the number. So here's why. Here's why. This is going to confuse you a little bit. This one, right? This one over here has 3, which is less than this one here, but this is not in a breakout segment, so cannot be traded. Come on, now we're learning, right? Cannot be traded because that's not the breakout segment. The last breakout segment is the purple. I want you to remember this drawing now. The last breakout segment is the purple. Why? Because it broke out. This one did not break out, so cannot be a breakout segment. Did not go above the high, cannot be a breakout segment. Why not this one? It's got the best score, right? Cannot be traded because it's below the CSL, which means the only one tradable is number 2. Who's learning here today? Andrew's on a roll today. Come on. Right? You just have to put together the little bits that you know, and don't feel thought you couldn't trade on the CSL. No, you can trade on the CSL, not below the CSL. Never below the CSL and never above the CSH. Right? Don't expect yourself to learn exactly the same time as everybody else. Right? Remember the first class. I was behind everybody. Right? I was behind everyone. You take your time. Right? This drawing, you're going to draw it home on your own piece of paper and write all the notes on there that I just gave you, and that will change a lot of your trading. Okay? Now, I was telling you breakout segment, why breakout segment is important and why you should draw on your shaded area. That's the last leg of your rally base rally. The last leg of your drop base drop. Write it down. The last leg. That's why I taught you yesterday how to draw a higher time frame rally base rally and a higher time frame drop base drop, which becomes a lower time frame trend. Okay, we're not done yet. It's going to get good. Okay, so we did curve, a little bit of curve, a little bit of trend. I know we're still struggling with trend, but guess what? I told everybody which is going to be the hardest one to get. What did I tell you all? Which was going to be the hardest one to get? I told you that trend is going to be the hardest one, right? And you know why I know the trend is going to be the hardest one? It's because I haven't shown you M's and W's yet, which, by the way, plays a big part of trend. But if I just jumped on and showed you trend and M's and W's and all of that stuff at the same time, the head spin you're feeling now, you'll be worse off. So allow me, trust me in this. We're going into it. Yesterday, no one knew what a terminated trend is. Now 90% of you know what it is, right? We are growing. Yes, probably yesterday left your own devices. You would have drawn number one as a breakout segment. Today, you're going to know all breakout segments must actually break out, must go above that, right? Now, the secret here is that when you have a breakout segment on, you have a shaded area that defines for you the clear area in which you should only look for your trade, right? You know why you can't look for a trade below the CSL? Because can you buy, and I'm going to draw it on. Let's say this fell from here and you fell to the zone. What type of trend are we in now? What type of trend are we in now? A terminated uptrend. So what business do you have trying to buy in a terminated uptrend? Is it clicking, everyone? Right? Why can't we buy here at number one? Why are you buying at a place that didn't even have the oomph to break out beyond the previous area? Since we are looking for unfold orders and these orders couldn't even push us up over that high, why are you trading this retest? No, it is not. It is not part of the breakout because the breakout, and that's the beauty of search strategy, gives you a clear definition. The breakout is the last leg from the CSL to the last high there that broke out beyond the pivot point. These is in between. This did not break out the highest point from the lowest point to the highest point, and only that shaded area from this line. Right? I know you're probably thinking, I saw other people do it different. That's okay. I'm going to prove to you that the right way is this way, right? Is that okay? Can I do that? Can I do that? Sorry, I'm rubbing my head in my face. It's hot here. It's like almost 90 degrees, and I've got a fan pumping on my face, and I apologize. It's good summer weather. I'm going to go outside after this and just sit outside in the yard by the pool, make a little fire or something, and just cool down. Okay, so watch this. I know, as I told you guys before, we only believe when we see Kayla do it, right? Who can see my screen right now? Now look at this. Breakout segment is where? Wait a minute. Identify the breakout segment. Where do you look for the zone? Within the breakout segment. What about this drop base rally here? No. We look there. Right? Are we seeing it? Are we getting the light bulb moments? Do you know how long it took me to find this particular video? I'm not gonna lie. It took me probably 45 minutes of searching. I know it is there, but I don't know where in the actual slides these. I was just kept going through everything to find it. I had my charts prepared to teach you and my drawings prepared to teach you this. It took me 45 minutes to find this particular one. Right? Now, look what is being shown. Can we take this drop base rally? No. We only take trades from the breakout segment. Right? Now I want you to listen carefully now. Please, everyone, turn up your volume real quick. When Kayla says it, that settles it. We believe it. I'm so glad I decided to actually do this where I take you back to these videos. Because previously I would just tell everybody, and I know that no one, you don't feel comfortable just believing it out of the box. So I'm glad that I went back and did this. And I'm making notes for myself so the next time I have to do this again, I know exactly which one it's in. Okay. So let's listen carefully to what's being said. Let me just check what the timestamp is on this one. I think it was this one that I wanted to play. Oh, no, this is just the one I wanted to show you something on. Oh, let me hear quickly what it says. Let me quickly stop screen share again. I forgot to turn the audio on. And let me hear what it says. Maybe this is not the one that I wanted to play out.
High. This zone only has one basing candle and it's fresh. Once we identify the entry zone, we need to identify the opposing supply zone for our target. After you have both the entry zone and the opposing target zone on your chart, it's time to evaluate the profit zone. We'll introduce profit zone in its entirety in an upcoming lesson. But in short, let's measure the distance between these two zones with a ratio.
I think I wanted to show you on this one, I wanted to show you that the opposing zone becomes the target because I was going to speak about that today, right? So as you can see, we do not take this as an entry. Even if there was a good trade there, we do not. We look only inside of the breakout segment. Look at what is being shaded here. The breakout segment only, right? That area is the only area in which you look for a trade. Are we learning something here today, right? Please tell me, are we learning something here today? I am going to load one more here quickly. Oh, I see. If I keep it open, okay, you're gonna have to give me a second. I kept it open too long, so it's reset itself. I'm gonna get it up here now. It's good why I took notes on this. That was check the trend over there. I'm gonna move this forward to 1 minute and 28 seconds. Watch this. It's gonna get better now. Right? It's gonna get better. Okay. Now, let's check this. I want you to listen carefully, everyone. After 1 minute and 28 seconds, listen to what she says, which I've been teaching for this entire year. Listen carefully.
Remember that we go down in time frame from step 1 to check the trend.
We go down in time frame from step 1 to check the trend. What is step 1? What is step 1, everybody? Step 1 is the curve. Don't believe me? Let's go up, 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 up. Step 1, set the curve. How far do you go down? We go down in time frame. Check the trend. We're not done yet. Listen carefully.
Looking at the direction of price within the curve range.
Looking at direction of price within what? Find the within the. I'm doing the emphasis here on purpose, everyone. Wait a minute. Can't I get my trend outside of my curve? No. Find the intermediate trend within the curve. You guys didn't believe me, right? Are we believers now? When Kayla says it, we know that settles it. Come on, right? Find the intermediate time frame trend within the curve. Within the curve. Within the curve. All of a sudden, you discover that you had all the information, right? You had all the information already. We're not done yet.
Continuing on with our example, we've moved the chart to...
Wait a minute, Kayla, what you doing? You're drawing your curve that close? Right here and right there? And now what you going to do? Watch. Watch, everyone.
The intermediate time frame. Starting with current price and following the candles back, we draw the 3 most recent segments. With the boxes drawn, it's clear that the green boxes are taller than the red box in between. The 3 segments consist of a low, high, a higher low, and a breakout to a higher high. And
a breakout to a higher high.
As a result, we're in an uptrend. Pausing to...
Higher highs, plural, higher lows, uptrend. Where's your break? 1, 2. Proving we are in a uptrend. Where's the trend? Inside the curve.
Assess the context. We see that within the curve range...
Kayla just keeps saying within the curve range. How could she do this? She's changing things, right? How could she do this to us? We thought we can draw it outside. Now she keeps changing it. I'm obviously doing tongue in cheek. You guys are too quiet in the chat, so you're making me keep saying things here, right? I want to see if everyone's getting this. Are we getting this? Are we becoming believers of this now? Awesome. Let's keep going.
Price is currently uptrending, and we can see that we still have some room for this trend to continue before it reaches the opposing curve end zone. In other words...
So yesterday, someone said, how far can we trade it? And I said, until the opposing curve. Someone says, does daily go to weekly? I said, no, daily goes to daily. So what have we just seen Kayla explain? That when we are inside of the curve, now let me blow your mind a little bit more. How come, right? She drew this rally-based rally over here, but we on, what time frame are we on? There's a curve here. We're looking on our intermediate time frame, 1 down, and we see a clear rally-based rally, which tells us it's a trend, right? It's a trend. Look what Tim says. Tim says this is the best explanation yet, and I know what you mean, Tim, because Kayla said it. Right? I know you're not saying that. Tim, I know you're not saying that. I'm just joking, right? But look at that, right? Are we learning? We're learning there. Now, at the beginning, I said to you, and I know we're reaching at the end here, I said to you, what if there was just a way, right, that we could, let me just check something. I think it might be something in here as well that I wanted to look at. Oh, no, that was yesterday. I said to you in the beginning, what if there was a way that we could just know whether we should take a trade or not take a trade? What about the candles inside of the curve? I'm not sure what you mean by that one. The candles can be inside of the curve. We don't trade the curve, right? Anchoring back to the on-demand is very effective. Thank you, Shala. Is there 2 breaks? Yes, there's the one. Right? Remember, breaks is just swing highs and swing lows. Break 1, break 2. Right? There's 2 breaks. Now, of course, in this particular video, Kayla's not speaking about 2 breaks. She's just showing the example. That's why she's not drawing on 2 breaks. But you can see it in here. And when you go to the actual trend identification video, so you search that in your backend, you type in your trend identification, those will all show you that it needs to be 2 breaks. Right? No problem, Michelle. Now, I'm gonna really bring it down, and I'm gonna say this. You're not gonna possibly fully understand it yet, but you're gonna tremendously appreciate me for taking you back here, right? Because you are wondering when to take a trade, when to not take a trade, when to do this, when to not do that, and you're thinking, if only someone could tell me when to do that. Then all this time, and I'm landing this plane now today, all this time, a lot of you didn't trade curve in the beginning because you thought that curve wasn't important. But I came on and I said your curve is tremendously important. And just because it scores low doesn't mean that it is not important. It scores low on the odds enhancers. Odds enhancers means things that make a trade better. But even if the curve scored 0 and it didn't necessarily make the trade better, here's what I want you to hear. Without the curve, there is no trade. So even though odds enhancers make things better, without certain components, there is no trade. Do we get that? That's what I was trying to say with curve. I'm trying new ways to explain it for us all to get it. Because the curve might score low on the odd enhancers table, but the absence of a curve means no trade is available. Right? Odds enhancers means we make things better. But if there's no thing to begin with, can we make it better? That's the explanation I was looking for. I was trying to say it over and over to get it to make sense of it. If we start with nothing, can we make it into something? No, we can't. Only God can. Right? Hey, Google, stop. Sorry. It's getting involved in the class. He wants to teach. Okay, so we cannot make something better. Can you place a trade if the stop is slightly in the curve? Yes, you can. Because you're not trading the curve, you're trading the trend. You're trading the zone in the trend. Right? Now, what if there was some secret way to know how to take the trade? And what if I could somehow prove that the curve is the most important point, just as Julie goes? Right? Let me show you. If I can find it real quick. It's all reset itself. I had it all up here. But I'll find it. I'll find it. Give me a second. Here we go. How many of you forgot about this?
In a downtrend.
Wait a minute. I'm going to zoom this one in. What if you knew when you could short, when you could long, when you should do nothing? Are you seeing this? And then also, by the way, what is the criteria most important here that defines all of the longs and shorts? Look at this. Curve high, curve middle, curve low. Nope, not trading with trend. How do I know it's not trading with trend? Because look here, if the trend, right, is down, okay, I can take a short here, I can take a short there, I can take a short there. If the trend is sideways, I can take a short at all of these points, with the exception of no action here. Why can't I take a trend here? Because the curve doesn't agree. It's location on curve. Even the zone. What does the zone tell? What is the zone odd enhancer? Position in the curve. Right? It asks you, where is the zone located on the curve? Right? The trade analyzer automates this, yes? But the problem is, if you don't see it like this, you don't believe it. Right? And then in the first class, I taught you this. How come you can be in a downtrend, right? Low on the curve and still short? This used to be part of XLT, advanced things only. But I'll tell you, I taught you in the first class about it. This happens when you expect the curve to break. No problem. No problem. We're ending in 5 minutes here. But I brought this up so that you can see, you know exactly. You can have a supply zone, right? You can be in a downtrend. If you're high on the curve, you can short. Supply zone, down, sideways market, short. Supply zone, look, you can do almost all of them everywhere. The only thing that changes what you can do is where you are on the curve. So that curve that scores 0.5, right? That scores so low. Without it, There is no trade. There is no trade. Are we getting value here today? All right. Yes, Brandy, exactly. A curve is expected to fail when the higher than curve time frame trend is expected to continue. So when you see that, then this year, short advanced is allowed. You can still short through the lower the curve, only in that scenario. Right? Now we've established where you trade, breakout segment. With what do you trade? With the trend. Right? Where must that trend be found? Inside of the curve. When do you trust the trend and the zone? When it's positioned on the correct area of the curve. When do you leave it alone? When you find a demand zone in a downtrend, high on the curve. But look at this. You can find a demand zone in an uptrend. Sorry, in a downtrend, right? Low on the curve and still take it. It can be in an opposite trend and you can still take it because of where it's positioned on the curve. Are you guys seeing what I'm saying? You can still take it even though it's a completely opposite trend based on where it's positioned on the curve. So who rules everything? It's the curve. Curve first, trend, breakout segment, zone. Right? When a curve is placed at all-time highs, I call it the floating curve. I just pull a line there. But you will not understand that until I get to the M's and W session. Right? Because what we do at all-time highs is we let the trend time frame create an M. In fact, let me show you. There's no placement of a curve at an all-time high. The absence of a zone means that there is no curve, right? So let's imagine that this year was an all-time high, right? And we have a curve over here. And now there's no zone here. By the way, that's not a rally-based drop, right? Let me just take that candle also away, not to confuse everyone. So we have an all-time high over here. There's no supply curve, but we are high on the curve. We are high on the curve. What do you mean, Chadron? We are high on the curve. Why? Because that's the highest price has ever been. So automatically that means high. And if it was the inverse, it will be the lowest price has ever been. So it'll be low. But the rules state we trade in supply, we buy in demand. So how would we ever get the trade here? We'd go to our trend time frame and we'd wait for a specific set of criteria. On the trend time frame, we require ourselves to go to the all-time high and produce an M. That is what? That is called a trend reversal signature. It's the earliest point at which we can see a trend reverse. However, trend reversals occur at curves. And since there is no curves, we require the second requirement from trend, which is 2 phases down. So how do we trade all-time highs? We wait for the trend time frame to break down twice from the all-time high, and then we take this area. Never this area, because it's not coming from a curve. It's coming from a floating curve, right? Hits the all-time high, gets an M, breaks down again. We're waiting for the M. Not yet. There's an M. It's not an M yet. Let's just see. It needs to go below this with the body. I thought I was going to do that. There. That's an M. After that M gets created, we need another one down, and then we can take that. Now, this one's running quite fast. We might not actually get that. So it might be here, but now we're in the opposing curve, right? If we expected that curve to go, that's where we'll trade it. This is not the best example. Why is this not the best example? Because the actual trade itself was not at the real all-time high. This was just a fake all-time high I just put on, right? Does everybody get it now? We need 2 breaks down from the top at an all-time high. You say you can't trade without the curve, but won't everything have a curve? If you look far back, no. Everything doesn't have a curve because there are all-time highs and all-time lows, and in the absence of that, there is no curve. So we call it the floating curve, and there we wait for a double break of a trend. Right? Ladies and gentlemen, that's been the end of the class. Hope you find value in it. Now,